Fellow subsidiary. When a parent acquired more than one subsidiary, it is fellow subsidiary. If you acquire more than one subsidiary, that is, he has two subsidiaries. It can be more than two, but for exam purpose, they can only give you two subsidiaries to deal with. So, what is your own duty in exam? We need to identify what of investments do we have. Let's take first question on that. Let's go to question Bhagat PSC. Let's go to Bhagat. He has two subsidiaries. And one associate, according to the question. Immediately, he has told me that he has two subsidiaries and one associate. I will open everything. We have question Prince, Barewa, Bhagat, Joni, he has two subsidiaries. With this, I will now open everything. I will consolidate the two subsidiaries acquired. I will say Bhagat. Consolidated statements of financial position as at the two subsidiaries acquired Bhagat, and the other one is Mingat. Mengat and Mingat. We don't consolidate associates. Said he also has investment in associates. Okay. Bhagat is preparing financial statements. Bhagat has two subsidiaries, Mengat and Mingat, and one associate. He has told me. And that's okay, no problem. Consolidated statement of financial position as at 31st May 2013. No current assets. PPE, plants. And plant of the parents, 5.3, plus that of the sub, plus 6, plus 3.220. Investment in associates, which is Skagat. Then he has available for sales. Parent is how much? 1020 plus 120 plus 100. Then goodwill. He told me he has two subsidiaries and one associate goodwill. After the goodwill, I will leave two line space and go to the current assets. Current assets. What are the current assets reported? Say inventory. Inventory of 27 plus 1100 plus 1460. Trade receivable. 1820 plus 900 plus 640. Cash. 2040 plus 2000 plus 160. Total assets. Equities and liabilities. Share capital. The share capital. Retained earning. Any other equity components. Then after then I'll put NCI. NCI. Non-current liability. Non-current liability. For non-current liability, long-time loans. Two four plus 300 plus 100. Defaulters. 500, 180 plus 60. Then lastly, current liability. For the current liability, he has to quickly open. Next one. Trade payable. Trade payable. Q3 plus 600 plus 20. Current assets. 12 plus 160 plus 480. I will now say, after this is done, this is majorly my work. Instead of me saying group structure now, to make the job faster in the exam, analyze your group structure. We say analysis. Analysis of GS, the group structure. The parents, Bhagat, he has two subsidiaries. First one, Megat. The second one, Megat. I will say date of acquisition. Retain earning at DOA. Other equity at DOA. Other equity components at DOA. Effective interest. NCI and the cost of investment. Immediately I've done this, I'll go to the next thing. Adjusted retained earning. Adjusted retained earnings of subsidiary. Now it is two subs, which are Mengats and Mingats. I would say as per SOFP. I need to determine the net assets. Say determination of net assets of subsidiary. Items, DOA, DOC, POS. First subsidiary, Megat. The second subsidiary, let's open it up. Determination of net assets of subsidiary, Mingats. Items, DOA, DOC, DOC, and POS. The goodwill, I need the goodwill of the two companies. I say goodwill. Megat, Mingat. Cost of investment, add NCI, purchase consideration, After the purchase consideration, net assets, DOE, goodwill. I will leave 2 line space in case of impairment. Do I need to retain any of the parents? Say any of parents. As per SOFP. Then, okay, NCI. Open NCI accounts. NCI in megats, in mingats. Date of acquisition. Then investment in associates. I need investments. Us. That's all. After I've done this, the job is half done. I will now start by reading the question, then posting. This is it. This is what I will open exam. Really, I've done this. I will now start reading the question and be posting. The questioner says, Bagat has 2 subsidiaries, Megat and Mingat, and 1 associate, Kagat. Since the adoption of IFRS by government, bankers are preparing the consolidated statement of financial position in accordance with the principles of international financial reporting standards. The draft statement of financial position of Bagat and the 2 subsidiaries as follows. All figures are absolutely correct. On 1st June, Bagat acquired 80% of Postman. On 1st June, he acquired 80%. On 1st June. Date of acquisition, 1st June 2012. He acquired how many percent? 80%. Parent is 80%. Filling the gap. NCI 20. Good. On the date of acquisition, the retained earning of Megat was 272 billion. The account is in million, so the return will be 2720 million. Okay. Of Megat, another component of equity is 80. I'll go to the question. 80. There will be no issue of capital since date of acquisition. The purchase consideration comprised of cash of 6 billion, cost of investments, filling the gap. Before I fill in the gap, has it been recorded? Or go and check. Yes, it's recorded. 6. Good. Whereas the fair value of identifiable net assets of Megat on this day was 8 billion. Fair value of the net assets. No story. He has given me the fair value of the net assets. Megat. Say if I sum the net assets, fair value of the net asset must be 8 billion. The net assets must be 8,000. The summation of everything. Okay. Yes, I will now go. He has given me share capital I'll go and pick the share capital. What is the share capital in the subsidiary? Megat. I'll go and pick the shares. 4,400. What was the retained at the date of acquisition? He has given me to be, which is in my analysis already. 2720. And he has given me other equity components to be 80. This is what the question says. I will now sum everything. Does it equal to the net asset? Because he said the net asset must equal to 8,000. You said the net asset must equal to 8,000. I will now add by saying 4,400 plus 2,720 plus 80. Oh, it's giving me 72. I will ask the question, why are you lying? Why are you lying? Because he said the net asset is 8,000, but on summing it is 7,200. I will now ask the question, what is responsible for the difference? Okay. Let's see the question now. The excess of the fair value of the net asset is due to an increase in the value of non-depreciable land. Oh, there is a revaluation surplus on land. I will now say 72 minus 8,000 to get the revaluation surplus on land. Minus 8,800 balancing figure. Revaluation surplus on land. 800. Don't forget BF. Balancing figure. I'll go to the second leg. Don't forget it. Enter there's a revaluation surplus. We debit the PPE and credit reserve. So I'll go to the PPE for the second leg. Plus 800. It's land, so I will not wait for depreciation. It's land. I will not wait. Any question for me? Any question for me? Any question for me? In the absence of no question, I will ask again. Next.
Hello, sir.
Good, sir. I'm listening.
Good evening, sir. Sir,
Good
sorry,
evening.
you said something when you debit the PPE with
For
800,
the credit
yes, for
reserve.
the evaluation surplus. Where did you credit?
Reserve. The balancing.
Reserve. Okay, sir.
Now, immediately I'll go. This is the tone of the question every day. Fair value of the net asset we give you. You work back to get the surplus or deficit. If they don't give you, they can only give you for land or retaining. We are still going to do the two. They will give us valuation surplus. We look for retaining ourselves. That is, two things can be determined from the fair value of the net asset. What are the two things? It's either they give me retaining to look for the valuation surplus, or they give me the valuation surplus and look for the retaining. But which one is more common? The revaluation surplus. To look for the valuation surplus is more common. Good. Next. An independent valuer I said that the fair value of the non-controlling interest in Megat was 1.72 billion. 1.72 billion. Oh, they've given me the fair value of NCI, but I will look for the group policy. What is the group policy? It is the policy of Megat to measure non-controlling interest on the basis of their proportionate shares in the identifiable net asset on the acquired subsidiary, not at fair value. So we are using share. They contradict. Always be careful when they give you the fair value of NCI or one of those indicators of fair value. You will see confirm from the question, what is the group policy? But in case they did not give me group policy and they've given me one of the indicators of fair value, I will now use fair value. Because they can contradict it. After giving fair value, they still say it is share proportionate. Like this question. Very simple. Share proportionate. We'll go to the question. The net assets. The net assets. What is the net assets? The net asset is 8,000. And how many percent does he acquire? According to the question, he acquired 80%. NCI will now be 20%. 20% of 8,000 will give me the NCI. Let's open. NCI now. At the date of acquisition. Share proportionate. I will say NCI percentage on net assets at the date of acquisition. 0.2 times 8,000. 0.2 times 8,000, that will give us 1.6. Let me confirm that. 1.6. What do I do to the 1.6? We add to the cost of investment, debit 1.6, then NCI, credit, date of acquisition 1.6. We'll go to the question. Goodwill calculation. Cost of investment, 6,000. Add NCI 1.6. This will give me 7.4, 7.6. What is the net asset at date of acquisition? He has given me the fair value of the net asset to be 8,000. The goodwill now. 8,000 minus 7.6. That is 400. But it is gain on purchase bargaining because the net asset is greater than the purchase consideration. 400. What is the 400? Negative goodwill. What do I do to the negative goodwill? In line with IFRS 3 business combination, is a gain to the parent and SCR if it is fair value. But if it is share proportionate, the gain belongs to who? Parent only. If it is share proportionate, the gain belongs to parent only. So I will now credit the gain to the parent account. As per SOP, I will now say gain of purchase bargain or bargain purchase. Credit 400. That's all. That is all. That is all. Any questions? Any question, please? Any question? When is gain on purchase bargaining according to IFRS 3? What do I need to know about it? The definition. That is one. Two, what are those factors that need to be reassessed before we can post gain on purchase bargaining? That's the second one. Three, what are the likely reasons for gain on purchase bargaining? And the fourth one, treatment of gain on purchase bargaining. Those are the four things you need to know when it is gain on purchase bargaining. One, let's repeat ourselves again. The definition of gain on purchase bargaining. Two, talk about what needs to be reassessed before we can post gain on purchase bargaining. Three, talk about reasons for gain on purchase bargaining. The fourth one is the treatment of gain on purchase bargaining. That's what it is. As per SOP, what was in the retained earnings of the parent points? All right. In the parent's account, wait a minute. A minute. Yes. Next. We are finished with that. Information one. Information two now. Also on June 2012, what happened? Also on June 22. What happened on that day? Bagat acquired 70%. Same day, 1st of June 22. He acquired 70%. That means NCI is 30%. Good. So far, so good at what he said. The consideration for this acquisition of these shares was 256 billion, 256 billion. I will check, has it been recorded? Yes, it is recorded. Cost of investment, 2560. It has been recorded. Under the purchase agreement of June 1, 2012, Bagat is required to pay former shareholder of Mingat 30% of the profit of Mingat on 31st May 2014 for each of the financial years 31st May 2013 and 2014. The fair value of this arrangement was estimated at 120 million at 1st June 2012, and this value has not changed. This amount is not being included in the financial statements. Who can tell me what type of consideration it is out of the 5 costs of investments? Who can give us clue? You want to write the exam? What type of the consideration is this one?
Deferred consideration.
Eh?
Deferred consideration.
Deferred, another contrary opinion? Is it deferred? Okay. We go with her, but it is not deferred consideration. It is contingent. I say, how do you know contingent consideration in exam? One condition. 2, I said you will see fair value of contingent consideration. Or fair value of the arrangements. These are the 2 words of the arrangements. No cost of investment use this word. No any cost of investment uses this word other than contingent. Third one. Third one. I will reassess what happened at DOC, which is 3 things can happen. It can be meets targets below exceed. These are the 3 things that can happen. And the question will give us 3 things. There is a silent condition. It's going to pay 30%. Do not put if, but he has given you the fair value of the property acquisition to be 120, which is the fair value of the arrangement. And he said the value has not changed. That means meet target. Say this value has not changed. And it has not been included in the financial statement. It is not recorded. Me too, I know, because it's only the cash I saw that has been recorded. If it is below target, instead of paying you 120, I will pay you 100. The question will tell you. What is meant as the cost of investment? Initial promise, 120. Retain earning, of parents, credit, 20, because I'm only going to pay 100. This is it. If it is below target, which we assume is not the question, the question says the value has not changed, meet target. But if it is exceed target, because of the extraordinary performance, they will tell you it's now going to pay 150. What is now my duty? Cost of investment. $120, initial promise. You take any of the parents, further debits, liability credits. These are the three ways you need to know. But meet target, which is the question? That's all. That is all. Any question for me? Any question for me? It has not been recorded and it is meet target. Close.
Please, I have a question, sir.
Oh, yeah, ask my brother. Ask.
So
I am
that
with you.
120 million, is it the 30%? Is it the 30% that has been estimated to be 120 million?
That is what it means. It means it must make profit of 600. That was the silent condition. But in exam, you don't bother with that because those two things he has given you, fair value of the arrangement. You cannot say it in dividend. You cannot say it in shares. The condition was silent. But if I'm going to give me the cost of capital, they don't say fair value of the arrangement. And what happened at the reporting date, which is the date of consolidation? The question will tell you. My brother, any issue? My brother, is your question answered?
Yes.
Thank you so much. So it has not been recorded, the 120. Meet target, cost of investment debit. Go to my liability. Then I open a line item or I put it in trade payables. Credit. That is it. And he also said the fair value of the identifiable net asset on 1st June 2012 was 3.52 billion. And they retain any another component of equity 1.1 and 140. He has given me the return to be 1.1. Other component to be 140. And he has also given me the net asset. So return 1.1, 140. And he has given me the fair value of the net assets. Second subsidiary. So I'll go and pick the shares. What is the shares in subsidiary Mingat? 2,000. Any other equity 140. Now said everything must equals to 2560. Say the fair value of the net asset. On 1st of June, where was it is not 2, it's 3560. 35. 3560.
Hello,
I
sir.
will
It's
now sum it up.
3520. Hello, sir.
Huh?
It's 3520.
Ah,
3520.
thank you, my sister. 3520, not 6. Let me release that. Mm. 3520. I will now add all the three that he has given me. The share capital, the retain and other components of input. Does it equals to 3520? I will ask, does it tally to
3240.
3520?
No, sir.
I will now ask the question, why are you lying? I will ask the question, why are you lying? Why are you lying? The question will not tell you what is responsible for the difference. Let's read. Let's read. And the excess of the fair value of the net asset is due to an increase in the value of property, plant, and equipment. Can I get the value of the property, plant, and asset? The valuation surplus. Balancing figure now. The valuation surplus. Balancing figure. On PPE. What is the valuation surplus on PPE? What is the figure?
280.
280. I'll now go to the question. My PPE plants plus 280. This time around, it is not land. I will need depreciation. It is not land. We need depreciation. I'll now go to the question. What is the useful life of the asset? The fair value of the non-controlling interest in Megat was 106 billion. When he has told me it is a good policy to value NC as share proportionate. Company use share proportionate. He has still given me fair value of NCR. You want me to fall into a trap? PP is depreciated on a straight line basis over 7 years. I've made the depreciation. Fellow subsidiary. So which question are we solving? Fellow subsidiary. Bagat PS. So let's go and calculate the depreciation. To say the surplus. So it's divided by 7 times DOA DOC. But we'll carry the PPE. Yes, what is the figure? Yes. The 40 now. I'll credit the PP. Minus what? The one we have used out of the surplus. I will now go to adjusted retained earning. In megawatt, what was the retained in megawatt? 3,000. In megawatts. Ounces. Depreciation now. Credits. PP debit retained. That is it. Any issue? Next one. Include the trade receivable of Bagat of 31st May 2030 is a receivable for Megat, okay, of 30 million. Unknown to Megat, Megat has paid the amount through a bank transfer by the work, close of the work 31st May 2030, but the amount has not yet been reflected in the bank statement of Bagat. It's on transit. All the old money, not part. Say you have paid all the old money. You cannot owe each other. You are a single entity. I'll go to the trade receivable.
Hello, sir.
Yes, my sister.
You didn't do the additional information to it. You skip that.
Ah,
Sorry, sir. Please, which question are we solving? I joined the class late.
I've answered you that time. I saw your message and I said fellow subsidiary Bagat.
Okay. Thank you, sir.
Okay. Let's go back. Thank you, myself. Missed that. Finally, Bagat acquired reserve interest in Kagat on 1st June 2010 for 400 million, achieving a significant influence over the company because anything above 20, definitely. He paid 400 million. Has it been recorded? I'll go and check. Yes, recorded. Over the company financial operation, Kagat PLC retaining for the year ended was 200 million. 200 million. Made a profit of 200 million. Cost of investment. I've opened investment in associates. I quickly go there and post. Cost of investment in associate 400. And he made a profit of what? 200 million, which 25% will go to the parents because he has over percent in it. 25% share profit, and that's a share profit. $0.25 times. How much was the retail earning for the year ended 200? 0.25 will give us 50. I will debit investment in associates and credit retail earning of the parents. Okay. Let's see. Where is the returning of the parents? Loudness. Okay, this is it. I'll now say share of associate profits. I will credit retaining and debit investments in associates. Question 5 is done because it said employed in the trade receivable is 30 million, but you note to the other one, he has paid everything. It's not part in transit. All the whole money has been paid. Goodwill arising on the purchase of Megat was stated for impairment on 1st May 2030, and this prove evidence of impairment to the tune of 36 million. So share proportionate. I need to calculate the goodwill. I know when there's this payments and you have a friend here. Go to the question. $50. Trade receivable done. Impairment of 36 million. What do we do to the payment of 36 million? It is share proportionate. Impairment. The goodwill belongs to the parents. Then I'll go to the goodwill calculation for the impairments. Goodwill calculation for the payments. Oh, you have not calculated the goodwill. What is the cost of investment? We know it. You pay cash of 256 plus the contingent consideration. I will add the two together. That is giving me 2560 plus 120 to give me 2680. Cost of investment 2680. Then the net asset at the date of acquisition. What is the net asset of subsidiary? $3,520, where 20% of this goes to the NCI because we only acquire 70%. 0.3 times 3,520. That will give me 1056. In megawatts, 1056. We have done this, but we don't write yet. 16. 16. NCI, the date of acquisition. Next, goodwill calculation. 1056. 1056. This will now give me purchase consideration 2680 plus 1056.
Sir, please, how did you get 1056?
30% of the net asset, which is 3,520, 0.3, because it's share proportionate, times 3,520, 1056. Then plus the cost of investment, 2680. That will give me 3736. Then the net asset at date of acquisition, 3520, to give me the goodwill at date of acquisition, minus 3520, 216. And the question said there is impairment of 36. It is share proportionate. It will be solved by the parents' impairment. It does not concern you. Then minus 36, that will give me 180. So goodwill at DOC. No goodwill in this. This one is gain opportunity again. Then 180. I'll go to the financial statements. Goodwill, 180. We are to have this class twice next week. We have been working with the modality of having this class twice next week. And if I want to appeal to us, can we start 8 o'clock instead of 8:30? Is it possible that we agree that we start 8 o'clock instead of 8:30? Let me hear your view.
It's possible, sir.
Yes, sir.
Okay, so next week we agree 8 o'clock, and we are going to have the class twice because we have so many things to do and you must cover everything before you go to this
So
exam.
which days?
Sir,
Yes,
please,
What
which
days are we
days?
having the class?
Our normal day, that one is certain. We are now working towards Monday. Or
I will have
when
tax on Monday.
you have an SFL, that's on
Tax.
Monday.
Yes,
Okay.
sir.
What about Wednesday?
Wednesday is SFM.
SFL, huh? We need to have this class twice. We need to have this class twice. Maybe we will take Sunday. Do you still have class on Sunday?
No, sir.
Find a way to fix 2 times. Sunday we'll pick Wednesday and Sunday. For next week, Wednesday and Sunday. That Sunday we can do it maybe from 6 or 7 so that we can have longer hours. I will communicate.
Which means it's going
Okay,
to be
that
this
is
Sunday
done.
then. It's going to be this Sunday then, sir.
Huh?
This coming Sunday. Since you are
There was
picking
no
Sunday,
lecture on Sunday now.
I mean, it's going to be this coming Sunday.
No. I'm finishing with the physical class this Sunday. The upper one. Serving. Wednesday, Sunday. No, today. Today is Thursday, Sunday. That's what we work towards that. Okay. And don't forget, it's Thursday, 8 o'clock. So with that, I'm done with the question. Because prepare
Sir,
a
please, I have a
consolidated.
question. I have a question, sir.
Yeah, but ask.
This additional information, Ivy,
Okay.
I
what
did
is
not
it?
really get the treatment.
Included
The
in
trade
trade
receivable.
receivable. We
Yes,
have
sir.
done that. Let's just look at it. Trade receivable can only come out in exam in 3 ways. Trade receivable, trade payable reconciliation between the parents and NCI. Trade receivable. That's trade payable reconciliation. We said 1, agree to OE. Agree to OE. Nothing it is transit. They both agree to the OE. What is my own duty in exam? Trade receivable, credit minus trade payable, debit minus. Second one, total cash. Total cash or inventory. Those are the 2 things that can be in transit. In transit is the total money that's in transit. Total money. I will now say trade receivable. You can know each other. Credits. The total cash that is in transit or inventory debit. That's all. All the total money. The most common one that they use to test is the part in transit. Parts. Third one. Parts in transit. This is the third one. Part of the inventory is in transit. Part of the inventory is in transit. Trade receivable or cash. Trade receivable. Credit minus the cash that is in transit or inventory. Debit. Then trade payable. Debit. That's all. These are the three ways. These are the three ways. Is it clear now? Is it clear now?
Sir, okay, my question is, this 30 million naira, did we deduct it from trade receivables and trade payables?
Because you cannot owe each other.
Okay,
So
sir.
including the receivable of Bagat at investment is a receivable from Megat of 30 million. Or not to Bagat. Megat has paid this amount through a bank transfer by the close of work of 31st of May. But it had not yet been reflected in the statements, bank statement of Bagat. It's in transit. All the money. It does not say parts. It does not say parts. It does not say parts. This is the one they give us. Total cash in transit. Minus 30,000 credit. Debit. Any other issue?
Oh, no, sir, it's clear now. Thank you, sir.
You're welcome. With this now, we are done. Just to consolidate. We'll now go to the question. Immediately you open everything and start posting as it's reading. It will not take time for you to finish. Nothing happened to this. $8,000. Nothing happened to this. 16. 16 minus what? 16 minus
1560.
1560. The 1560, I will take it. The first one is 3,000. Share capital, 4,400, 3,000. I'll go and check other components of equity in the statement of financial position. It's 80, no changes. 800. 3,000 minus 2,720. 3,000 minus 2,720. That is the post is 280 to share. I'll go and do for the other one too, to know the post. $2,000. 1560. I'll check other component. Always check 140. 280. The post now. 1560 minus 110, 460. I'll now say share of profit. Share of profit. Share of profit. In megawatts. In megawatts. In megawatts, you're going to collect 0.8 times 280. 0.8 times 280. That will give me 224. While in megawatt is going to collect 0.7 times 460. 0.7 times 460. 322. I cannot consolidate. I cannot consolidate. I cannot get my return. I say 48 plus 400, the contingent, the purchase consideration, plus 50 minus 36 plus 224 plus 322, 5760. 57. Good. I'll go to the SCI now. Share profits. NCI. At the date of acquisition, we'll now say share profits. Is 0.2 times what is the post? Zero 0.2 times 280, 56. 1656. Then you only collect 30%, 0.3 times 460, 138. 1056 plus 138. 1194. So NCI to be reported. NCI DOC will now equals to 1656 plus 1194 plus 1656 2850. That's all. With this, I can now consolidate. With this, I can now consolidate. I'll go to the question. Which one are we doing? This is fellow subsidiary. Share profit 200 plus 450, 250, 400 plus 50, 450. PPE now. PPE, we have 53 plus 46 plus 3220 plus 800 plus 280 minus 40, 14160. That's all. Then financial available is 1020 plus 120 plus 100, 1240. Then inventory 27 plus 110 plus 1460 52 5260 1820 plus 900 plus 640 minus 30 33 333 30. Then 2040 40 plus 2000 plus 160 plus 30 4230. We'll go to the question. What is the share capital of the parent? 10,400. Other equity component of the parent? 240. NCI is 2850. What is the return again? Let's go and check. Five 5760. 5760. 57 5760. Then next 240 plus 300, 24 plus 2 is give me 28. Then 500 plus 180 plus 60 740. Then 23 plus 600 plus 1 plus 120 4220. 4220. Then plus 12 plus 160 plus 480 will give us 180. That is the end. So that is done. What is the total asset now? What is the total asset?
So 28,850.
What do you call it?
Sir? 28,850. 28,850.
850. The equity and liability income.
Yeah, the same thing, sir.
Okay. We now have 28,850. Good. 28,850. 28,850. Good. Now, let me take you to something you need to know very well. When it is share of proportionate, don't forget no goodwill attributed to SCI. That thing must be constantly be ringing on your mind, because we still get to a question that it will be difficult to get the share of posts. We need to know. For example, now, if I want to get SCI at the date of consolidation for Megat, I will just sum the net assets at the date of consolidation, which is 440 plus 3,000 plus 80 plus 800. So this one will give me 8,000 8,280. NCI here is 20%. If I want to get NCI now, just say 0.2 times 8,280. That's all. times 0.2, it will give me 1656. That is the NCR at DOC. Those we have gotten at the date of acquisition is 0.2 times 800 is the same thing. Please take note of that. It's the same thing. No goodwill attributed to NCI when NCI is valued at share of proportionate. They can only entitle to what? Net assets. That must be known very well. So that when we get to disposal, you understand better. Now, let's go to another area that they have been testing so much. I don't want to dwell more on fellow subsidiary. Reason that I don't see it coming. But let's go to one area, sub, and D-shape. Let's get a foundation because we have to solve 2 or 3 questions in that area. We have to solve so much on that area because the last 3 diets, they brought it. So I would like to lay a foundation on what to know and treat it very well this night. Are you seeing my screen?
Yes, sir.
Okay. Now, look at this. Sub, sweep, this shape, or complex group. So they call it this shape, sub, this shape, or complex group. This is what they've tested last 3 diets. We are going to solve last diet question here so that you can see. What differentiates between this one and how can they be tested? Look at scenario, equal, BQ, and SQL. If equal acquire 80% here, BQ now acquire 70%. This is not fellow subsidiary, it is sub. How? Because it's not the parent that acquired the 2 subsidiary. It is the subsidiary of the parent, the rest subsidiary, now acquire another subsidiary for the parent, which is known as indirect subsidiary. It's different from fellow subsidiary. How? Because it's the parent that acquired the 2 subsidiaries. This is sub. Look at the structure now. The structure will now look like this. Equal in BQ, 80%. BQ is equal. BQ is equal. 20%, 70%, 70%. This is sub-sub. Sub-sub. Now, this shape, if echo, BQ, and CQ, echo acquire 80% here. BQ now acquire 60%. Echo C acquire, let's say, 10%. Echo C acquire CQ 10%. This is this shape. Look at it. How do they call it this shape? I'm going to say echo in BQ 80%. BQ is equal now. BQ is equal 60%. BQ is equal 60%. Echo now has direct 10%. This is this shape. It can be tested in two ways. This is the first way for this shape. The first one, according to the standard, when the direct subsidiary have direct control over the indirect subsidiary, meaning BQ has direct control is equal 60%. The second one, the combination of their shares, the combination, look at it, equal, BQ, and CQ. Equal acquire 70%. BQ now acquire 30%. Echo Sina acquire 40%. This is the second way. BQ does not have direct control over CQ. It's the combination of their shares that give control. Combination. Addition of the parent direct subsidiary in indirect subsidiary. Direct investment in indirect subsidiary. Plus the shares of direct subsidiary in the indirect subsidiary. What are we saying? BQ has 30 is equal. Don't forget, ECHO has 70%. So he can manipulate this 30% to his own position. He also has 40%. This is this shape. It's only two ways. See? ECHO in BQ, 70%. Last two diets, this one was tested. BQ. BQ now has 30% in CQ. BQ now has 30% in CQ. ECHO now has 40%. You will consolidate. What is now the difference between sub-sub and this shape? In sub-sub, parent does not have direct investment in the indirect subsidiary. That's the difference between the two. This is it. This is sub-sub. Because parent does not have, this is sub-sub. These are the two ways this shape can be tested. Which is the complex group. First one, the parent, direct subsidiary of the parent, has direct control in the indirect subsidiaries. Second one is the combination of their shares that gives us to. In exam, what is NAMA audit? What are the things I must know? It's only 4 things, which we are going to be testing it now. Only 4 things. This is what we will do next week. This is only what we are going to do. Let's solve and this shape. We will do it on Thursday and on Sunday. Now, I don't know why I can decided to be testing sub and this shape always now. One, things to know. When it is sub or this shape. 4 things. One, determination of dates of acquisition in the direct, indirect subsidiary. That's 1. 2, effective interest. Interest in the indirect subsidiary. 3, cost of investment. Cost of investment in the indirect subsidiary. The lastly, reduction in SCI from the direct subsidiary. These are the 4 things you need to know. We will not take all the 4 things one after the other. We will explain one after the other. Determination of the date of acquisition. They can only come out in exam in 3 ways. Determination of the date of acquisition can only be tested in exam in 3 ways. Let's start with that one first. Before we start, any question? Any question? Okay, the answer to no question. Let's start. The first one. How do we determine the date of acquisition? First, determination of date of acquisition. Case 1. April, B2, C2. April acquire 80%. 1st April 2011. The same day, Biko acquires 70%. 1st April 2011. No issue. What is the date of acquisition? 1st April 2011 for both of them. ICANN will not test this. Case 2. Case 2. April, B2, and C2. April acquire 80%. 1st April 2013. Biko now acquire 70%. 1st April 2015. What is the date of acquisition? This one is for the Tesla rights. What is the date of acquisition? What is the date of acquisition? What is the date of acquisition? I'm asking the class. What is the date of acquisition? I'm asking you. Are you with me?
We are with you,
Where with
sir.
you, sir?
Good. What is the date of acquisition?
1st April 2020, 2013 for HECO. Then BCO to SICO, 1st April 2015. So it's
For
2
the
years
scenario
apart.
2.
Yes, for the scenario 2.
I can't hear you. Somebody is talking, but I cannot hear.
I said for HECO, we have 1st April 2013. That's for the case 2. And BCO to SICO, 1st April 2015. I mean, 2015. So it's 2 years apart. Is that the question you're asking, sir?
Now, what is the date of acquisition we agreed to? 2 dates.
Yes.
ECO in BICO. 1st April 2013. SICO has not come into existence. It's not in the picture at all. When does ECO has control over SICO?
That was in 2013.
That is 1st April 2015. Why do I need to know the retaining? Why do I need to know the date of acquisition? Because they will not give me several retaining. ECO in SICO. First, that's it. 1st April 2015. ECO is SICO. 1st April 2015. Now, the last scenario, case 3. Case 3.
Sir, sorry.
Okay.
So you mean in the second scenario, the date of acquisition is going to be 1st of April 2015?
When does ECO has control over SICO? Is the
The
day
1st of April
20 what?
15.
Yes. That is the day he has control. In 2020, in 2013, SICO is not in even at all come to existence. SICO only comes to existence when BICO acquires SICO 2015. It is those 4 things you must put in memory, how to apply it in a question. After you have determined that it is sub, and D shape. Next, the last scenario. ECO, BICO, and SICO. ECO acquire 90% 1st April 2016. BICO acquire 80% 1st April 2013. What is the date of acquisition? Hat-trick of sub and D-shape in a row. I want to know what is happening. Why are they testing D-shape and sub all the time? The last 3 diets, it was sub and D-shape. Because me, I did not see anything big deal in it. And it's the most tested area in ICANN exam. It has come out 8 times. Whereas some questions, some type of group has not come, like disposal of subsidiary. They've not tested it before. Piecemeal acquisition is only 1 time. Equity transaction, not at all. They only has a theory about it. Foreign subsidiary 2 times. It is this source of D-shape, Why? What is the date of acquisition? My flu, 2 times. What is the date of acquisition?
So 1st April 2016.
Huh?
1st April 2016.
It is 1st April 2016. It is 1st April 2016. The day he has control, it is the date that we are going to pay the retaining, the net asset on that day. The day he has control, that will be the day we are going to calculate goodwill. We are going to use the net assets. We are going to use the retained earning. That one is set. Let's go to the second one. What is the second one? How do we determine effective interest? Let's use scenario 3. Effective interest. In the that is it. Let's use scenario 3. Echo in Biko. Parents 90%. NC. That is all. Echo is equal. Echo is equal. Echo is equal. Echo is equal. I will now say parents. 90% times 80%. That is it. 90% times 80%. What does it give us? 90 times 80.
72%.
90% times 80%. How much?
72%.
70,
72.
72%. NCR. 100 minus 72. That's all. Let's assume he has a direct investment. And after multiplying, is below on control level of parents. It doesn't matter. It's just for you to share profit. It doesn't matter. What are we saying? Let's consider this scenario. Parents. Echo. Equal. Equal. He has 60%. Equal has 70%. 60 times 70. After I multiply, I'll now see effective interest now. Echo is equal. I will now say 60 times 70 parents. Times 0.7. What does it give us? Zero point 0.6 times 0.7.
42%.
42%. NCI. 58%. It doesn't matter. After multiplying is less than the control. No, that is not the way to determine control. Control as exists when my direct subsidiary acquire indirect. This is to share profits. Let me leave us. Let me show you what I'm saying. For example, the last scenario of 52 and 48 and 52%. Let's say equal, BICO, SICO. BICO make a profit, he acquire 70%, while this one acquire 60%. BICO made a profit of 400. SICO made a profit of 300. Don't forget, any profit that BICO make, 70% will go to the parents. And any profit that SICO make, 360% will go to BICO. In how many SICO made a profit? This is their profits. SICO make a profit of 300. 60% of 300. What is the 60% of 300?
$180.
180. Out of this 300, 180 will go to this BICO. So total money is 580, which parent will collect 70%. 0.7 times 580. And that's it. 0.7 times 580.
406.
406.
6.
That is it. We are looking at it. Parents will now go direct. Because you make 400, 70%, bring it. Out of the 400 you make, 70%. What is the 70% of 400? 0.7 times 400. That will give me 280. And I said, don't worry, don't help me collect my money from this person. Simple. Okay? 70% times 60%. 42%. He will now collect 42% of 300. 0.42 times 300. 126. Add it together. It will still give you 406. It is effective interest is to share profits. It's not to determine control. Effective interest is for purpose of it is to determine profit or loss after acquisition. If you multiply, it's not less than the controlling interest, leave it. That does not say it does not have control. After multiplying the two together, it's less than the controlling interest of 51%. It does not matter. Leave it that way. Now, let's say he has direct investment. Apart from the direct or indirect investments, he now has the direct investment. How do we calculate the effective interest? For example, this is what I'm saying. Equal. Equals Biconas EcoC has direct investment, 10%. How do I determine the effective interest in the indirect subsidiaries? Very simple.
Sir. Please, can I take you back a bit?
You can. This place is the most important part of the sub addition. Immediately, all of you are good on this, is to apply it.
Okay. So I'm taking you back to this. I'm taking you back to the first scenario where we have 70% from equal to BICO and then 60% from BICO to SICO. Now, in the first scenario we did, 400 was the profit from BICO. Then we applied 60% of 300. In that instance, were we supposed to have 400? ECO was not entitled to the whole 400 for BICO? I just want to understand how
they share the profits. BICO made a profit of 400. Do you agree?
Yes.
Out of the 400 he made, how many is going to the parent? ECO, 70%.
Okay.
But that is own profit. It's also invested in somewhere, 60% in SICO. And SICO reported a profit of 300. Anything that SICO make, BICO will collect 300. It will collect 60% of the 300.
Okay.
60% of 300 is 180. Plus the 400 that BICO itself made.
He initially had. Okay.
Total money is now 580. Exactly. Out of the 580, 70% will now go to ECO, which is giving us 406.
I understand now. Thank you.
Now let's draw this one now. He has 70%, the effective interest. Now let's do this scenario. I will now say in the indirect subsidiary, ECO is equal. The effective interest, parent, 0.7 times 0.6, plus the direct investment, 10%. He has a direct investment, 10%. After I multiply, I will now add this direct investment to give me the total investment. He has a equal. NCI will now be 70 times 60. 42 plus 10, 52. That's all. The next one is the cost of investment in the indirect subsidiary. Cost of investment in the indirect subsidiary. Cost of investment in the indirect subsidiary. How do I determine the cost of investment in indirect subsidiary? Look at the scenario. A2, B2, C2. Let's say A2 makes 70%. Equals 60%. How much they pay for each other? Cost of investment. ECO in BICO, how much does he pay for the 70? He will record it under ECO, let's say 800. How much BICO pay for SICO will be under BICO, let's say 500. To calculate goodwill now, cost of investment for the goodwill in SICO. If I want to know the cost of investment in SICO, how much does BICO pay for SICO? 500. Or now say 0% of ECO in BICO, 70%. 0.7 times 500. That is it. 0.7 times 500. That is it. For goodwill calculation, in SICO is the percentage of the parent in the direct subsidiary multiplied by the cost of investment in indirect subsidiary. That's for the standard assets, which we are going to follow. The lastly, reduction in NCI. We use 70%. I will now reduce the NCI by 30%. The NCI that we reported in the direct subsidiary will be reduced by 30% of the cost of investment. And that's it. Now use 70% to calculate goodwill. The remaining NCI percentage will be reduced. That is the four things. We must know when it is soft, and this shape. So, on Thursday, no more explanation. I'm going directly to question. And we have to solve two questions.
Excuse me, sir.
Any question?
Yes, sir. Sir, please, what does this reduction in SCI mean?
When we get to calculation, you now see it. You know that I'm using 70% to calculate everything now. I'm doing in indirect. The remaining 30% that remain, your NCI cannot be at 100%. You will now remove the 30% to bring it down to 70% that you're using for the calculation. Any issue?
So that's not clear, please. I don't understand it.
How many percent do we use to calculate goodwill? 70% of 500. I will now reduce the NCI by the balance. If it is 60%, 40% will be reduced by NCI. All these things is still in abstract. By the time we get to next week, we start putting it to question. Yeah, we will see it more clearly than this. So, I will not go to explanation again. I'll just go to the question. Then all these things I'll be using it to explain.
Sir, sorry, let me rephrase it. Under what conditions do we have reduction in NCI, or what reduces our NCI?
We 70%. Look at it, man. I'll draw it here. Equal 70, cost of investment, 800, 500. 70% of the 500. The remaining 30%, I will reduce it. We just know it to this extent. Next week, you will see practical application of it. And last that question we are going to solve.
Sir, who will claim the reduction?
What do you say?
The reduction, the 30% that will be reduced. Who is going to claim it?
The 30% that we are reducing because your own NCI cannot be at 100%. Because I only use 70% to calculate. So 30% will be reduction in NCI. Make me calm down. Am I worried? Next week, We will sell together. But then we'll see what I mean. Time is past 11 o'clock. I got grace. See you next week. Wednesday, Thursday, 8 o'clock. Thursday, 8 o'clock. The question of sub and this shape have already been sent. So, see you next week.
Thank you, sir.
You're
Good night.
welcome.
Thank you,
No.
sir.